Welcome. In this video, Zbcn coin 900% bullish wave is coming. What is the reason? We will analyze it. Don't forget to subscribe, don't forget to like, and please watch to the end to understand. A downtrend is formed when the market continues for a long period by making lower highs and lower lows, with sellers dominating the price action. During this process, investor sentiment is generally negative because the price keeps moving downward. However, no trend lasts forever. At some point, buyers start to gain strength, sellers weaken, and the price may break this downward momentum. In such a case, the price can move above the downtrend line, signaling the start of a new phase. The break of a trend line is an important technical signal because it indicates that a change in market direction may be beginning. If the price has stayed below this line for a long time, there is often a noticeable increase in trading volume at the moment of the breakout. This increase happens as technical traders and those waiting for a buying opportunity enter the market. However, right after the breakout, it is quite common for the price to return to the trend line for what is called a retest. A retest checks whether the broken trend line now acts as a support. If the price bounces upward after touching this line, it shows that the breakout is strong and not false. At this point, it becomes clear that buyers have taken control of the market and the influence of sellers has diminished. The retest stage also creates a second opportunity for investors who hesitated to enter a position earlier, as the bounce from this level strengthens the probability of a continued rise. In such a scenario, market movement generally proceeds in three stages. In the first stage, the breakout occurs, accompanied by an increase in volume. Then the price pulls back to test the broken trend line. During this correction, a decrease in volume is normal and can indicate that the move is healthy. In the final stage, if the retest is successful, the price regains upward momentum and begins to move toward previous resistance levels. Investor sentiment also shifts during this process. Investors who suffered losses and lost confidence during the downtrend start to regain hope with the break of the trend line. The bounce during the retest stage reinforces this confidence, which can lead to increased buying volume and faster price increases. For the post-retest price action to remain strong, it is important that there are no closes below the broken trend line. If the price falls back below this level, the breakout may be considered invalid, and the downtrend could resume. For this reason, stop-loss levels are often placed just below this line for risk management purposes. If the price bounces off the broken trend line and continues upward, it generally tends to rise toward the previous peak levels. If these levels are broken, larger upward waves may begin. However, fundamental factors must also support this technical outlook. Project news, a generally positive market sentiment, or strong partnership announcements can accelerate this technical move. In the current situation, the fact that the price has broken the downtrend and is now in the retest stage shows that a critical turning point has been reached. If buyers act strongly at this point, a long-term uptrend may begin. However, if the price falls back below the trend line, this scenario becomes invalid. Therefore, this stage carries both opportunity and risk and must be monitored closely. But we can't make decisions based solely on trends, so let's also look at other metrics. Stay tuned.
The 200 EMA, or 200-period exponential moving average, is considered one of the strongest indicators of the long-term trend in technical analysis. This average is calculated by exponentially weighting the closing prices of the last 200 candles, filtering out short-term fluctuations, and revealing the main direction of the market. Among investors and traders, it is generally believed that prices above this average indicate bull market conditions, while prices below it suggest a bear market trend. Therefore, a price staying above the 200 EMA is a strong sign that the market is maintaining its long-term uptrend. When the price moves above the 200 EMA, it means that buyers continue to dominate the market. This level is often used as a key technical benchmark by large funds, institutional investors, and algorithmic trading systems. Price action above this level strengthens market confidence. As long as the price does not fall below this average, buyers tend to be more willing to open new positions. Sellers, on the other hand, act more cautiously at this point because the long-term trend is still upward. The 200 EMA also acts as a dynamic support. This means that the price may approach or slightly touch this level from time to time, but as long as it does not break it, this average provides a strong base for the price. Especially in uptrends, many investors see the price approaching the 200 EMA as a buy zone opportunity. Rebounds from this level can often turn into sharp and fast rallies. For this reason, investors tend to keep buy orders ready when the price nears the 200 EMA. When an asset remains above the 200 EMA for an extended period, it shows that the market is in a healthy uptrend. During this process, the price may experience fluctuations or temporary corrections, but the main direction remains upward. Even if there are short-term sell-offs during these corrections, the price can find support at this average and continue upward. Such a structure helps the uptrend mature and increases investor confidence. Falling below the 200 EMA, however, creates a completely different psychology. This could mean that the long-term uptrend is weakening or has ended. If the price drops below this level and closes there, many traders see it as a sell signal. In this case, buyers lose confidence, sellers gain strength, and downward pressure increases. Therefore, staying above the 200 EMA is critical for the continuation of the bullish scenario. Remaining above the 200 EMA gives stronger signals when analyzed alongside other technical indicators. For example, an upward movement in the MACD, the RSI staying above the 50 level, or an increase in volume, can confirm that holding above this level supports the uptrend. Conversely, even if the price is above the 200 EMA, if other indicators are signaling weakness, caution is advised. Large investors often use the 200 EMA to determine the direction of their long-term positions. For example, a fund manager may prefer to stay long when the price is above this average and reduce positions when it falls below it. For this reason, the 200 EMA is considered highly important not only for individual investors, but also in the institutional sphere. Staying above this level also affects market momentum. Since technical traders place great importance on such levels, collective buying or selling decisions often form around them. Therefore, the price being above the 200 EMA also provides a psychological advantage. Investors feel they are on the right side of the trend and act more confidently. In summary, the price remaining above the 200 EMA indicates that the market is maintaining its long-term uptrend and that buyers are in control. As long as this level is not broken, the upward potential remains high. However, the price approaching this level should always be monitored closely, as a break below could signal a possible trend change. For this reason, the 200 EMA is a critical indicator in terms of both opportunities and risks, and the bullish scenario can remain strong as long as the price stays above this level.
A steep ascending channel formation in the market is generally considered an indication of a strong bullish trend. Such channels are formed when the price consistently makes higher lows and higher highs. The lower line of the channel acts as dynamic support, while the upper line serves as dynamic resistance. Steep ascending channels rise at a sharper angle compared to standard ascending channels, indicating that buyers are very strong in the market while sellers' pressure remains quite weak. In such a structure, the price continuously bounces off the lower band of the channel and moves toward the upper band. If the current price is located near the lower or middle area of the channel and reaches the upper band, the potential return from this move can be very high. The 900% increase mentioned in the scenario refers to the massive potential that could occur if the upper band of such a channel is reached. These steep channels generally emerge during periods of high-volume buying and strong interest from market participants. Especially in bull markets, investors' fear of missing out often leads to aggressive buying, causing prices to climb very rapidly. Although sustaining such steep channels can be more challenging in technical analysis, a position caught at the right time can yield extraordinary returns for the investor. Price movement within this channel proves that the trend remains strong and that buyers maintain their dominance over the market. One of the most important aspects to watch in steep ascending channel formations is the regular testing of the channel's upper and lower boundaries. Each time the price reaches the lower band, buyers step in and push the price upward. This boosts investor confidence. Upon reaching the upper band, profit-taking is usually observed, but in strong trends, these sell-offs tend to be short-lived, and the price resumes its upward movement within the channel. The expectation of a potential 900% increase here stems from the significant distance between the current price and the upper band of the channel. This can be quite common in the cryptocurrency market, where price movements tend to be much sharper and faster compared to traditional markets. For example, an altcoin during a strong bull trend can multiply in value many times over within weeks. Therefore, an asset that is moving within a steep ascending channel and supported by strong volume can deliver exceptionally high returns to investors in a short period of time. One of the most significant psychological effects of this formation is that it minimizes investors' desire to go against the trend, because everyone can see that the price is moving upward. The steeper the slope of the channel, the stronger investors' bullish expectations become. This leads to more aggressive buy orders and further increases in price momentum. However, the key risk to watch in such movements is that if the channel breaks, sharp corrections can occur. Steep ascending channel formations are often supported by strong fundamental news flows, project announcements, partnership disclosures, or the market entering a general bullish mood. If such a channel is observed in technical analysis, and positive news is also arriving on the fundamental side, the probability of the price reaching the upper band increases even further. This strengthens the likelihood of realizing the 900% potential targeted by investors. The lower band of the channel is also important for investors in determining a stop-loss level. Once the channel breaks, the strength of the trend begins to weaken. However, as long as the break does not occur and the price stays above the lower band, the bullish trend remains technically intact. In such a case, once the middle area of the channel is crossed, the probability of reaching the upper band is higher. Breaking past the middle area is often interpreted as momentum increase and encourages new buyers to enter the market. In conclusion, a price moving within a steep ascending channel can offer massive potential when it reaches the upper band. In the current scenario, this potential has been calculated as 900%, making it an extremely attractive target for investors. However, in formations with such high returns, both opportunities and risks are significant. Taking profits and protecting capital when the price reaches the upper band would be a wise move, as markets often make short-term corrections after such steep rallies. Still, as long as the trend remains intact, these types of channels can offer extraordinary gains to investors and, when approached with the right strategy, can present significant financial opportunities.
Rising channels are also a very important tool for trend following. When an asset moves within this channel for a long time, investors can make buy and sell decisions by following the channel's boundaries. Buying when the price is near the lower band and taking profit when it approaches the upper band is a strategy used by many investors. This allows for more planned and disciplined movements in the market. The expectation of a 900% increase toward the upper band of a steep rising channel gives investors great hope, especially in highly volatile markets such as cryptocurrencies. However, this huge potential also means great responsibility and risk. Investors must always keep their technical and fundamental analyses up to date, follow news flow, and try to understand market sentiment. Even the best technical formation can become ineffective due to negative fundamental developments or overall market crashes. In conclusion, a steep rising channel formation is a sign of a strong bull trend, and the price reaching the upper band carries an enormous potential for a 900% increase. However, price movements in this process can be highly volatile and sudden corrections may occur. Investors should shape their strategies accordingly, manage their risks well, and be prepared for market movements. In this way, they can make the most of this great opportunity and maximize the profit potential offered by the rising channel. If investors follow this process patiently, with discipline, and strategically, price movements within the steep rising channel can bring them significant long-term financial gains. Although increases as high as 900% sound very appealing, caution should always be exercised due to the nature of the market, and risk management should remain a top priority. This way, it is possible to stay strong both psychologically and financially within an uptrend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.